All right, let's talk about something that trips a lot of people up. Nicotine and life insurance. If you use nicotine in any form, whether it's vaping, cigars, whatever, and you've tried to get life insurance, you've probably felt that sting of the smoker rate, right? But here's the thing. What if those crazy high rates aren't the whole story? We're going to dig into this because, honestly, getting this right could save you a ton of money and a whole lot of frustration.
I love this quote because it just nails the feeling, doesn't it? It feels exactly like a penalty box. You're just stuck. The insurance company hears nicotine, they stamp smoker on your file, and that's it. Case closed. It can feel so final, and you're left thinking, wait, is that really fair?
So what if that penalty box isn't the only game in town? What if the rules are totally different depending on which insurance company you talk to? This is the big idea, the key that can unlock this whole thing for you. It's not about one set of rules. It's about finding the game with the rules that work in your favor.
And that brings us to the most important point of this whole explainer. It's not that you use nicotine that's the issue. Nope. It's how the insurance company you're applying to decides to categorize it. You see, every single carrier has its own secret rulebook. And believe it or not, what one company calls a smoker, another might actually call a non-smoker. It's all about the category they put you in.
All right, so let's start unpacking these categories. We're going to look at how different products are seen in the eyes of an underwriter, because lumping them all together is hands down the biggest and most expensive mistake you can possibly make.
Okay, let's start with the classic comparison, cigarettes versus cigars. Now, cigarettes, yeah, they almost always get you the toughest rates. No surprise there, right? Insurers see the frequency and just assume the worst. But cigars are a totally different story. A lot of carriers are way more flexible, especially if you're talking about, say, one cigar a month to celebrate something. The key, though, is being super clear about it. If you're vague, they're just going to throw you in the cigarette bucket by default.
And this isn't just about smoking versus cigars. Look at smokeless tobacco, like chew or dip. A lot of companies get that the risk is different from cigarettes, so you can often find much better pricing. But then you have vaping. And vaping is basically the Wild West of insurance right now. Seriously, the rules are all over the map. Some carriers treat it exactly like cigarettes, no questions asked. Others are a bit more understanding. This is where your choice of carrier becomes absolutely critical.
Okay, so this all leads to the real heart of the matter, how insurers actually see you. Because it's their rulebook, not yours, that decides what you're going to pay.
And this table, this says everything. Check this out. We've got one person with the exact same habit, one cigar per month, that's it. Carrier A, bam, smoker rates, high premiums, you're in the penalty box. Carrier B is better, they'll give you a standard non-smoker rate. But then look at Carrier C. They have a specific rule for occasional cigar smokers, and they give you a preferred rate, the best you can get. It's the same person, the same habit, but the price difference is just massive.
So the obvious question is, okay, but how do they actually know what I do? Good question. Let's pull back the curtain and talk about the testing process. It's actually pretty straightforward.
It all comes down to one little thing called cotinine. Basically, when your body processes nicotine, cotinine is what's left behind. And yeah, it shows up on the blood or urine test they do for the medical exam. But, and this is so important, the test is kinda dumb. It can only tell them if you've had nicotine. It can't tell them how. It has no idea if it was from a cigarette, a vape, a cigar, or even nicotine gum. And that's exactly why what you tell them on the application is so incredibly important. You're giving them the context for that lab result.
So the whole process really works like this. Step 1, you tell them your story on the application, and you've got to be specific, what you use, how often, when was the last time. Step 2, you do the lab work, and the test for cotinine comes back positive, confirming you have nicotine in your system. No surprise there. Then, step 3, the underwriter looks at your application and your lab result. If they match up, you're golden. The lab work just confirms what you already told them. It's not a gotcha moment, it's just a checkbox.
All right, so knowing all this, how do we actually use it? How do we find that path from the high-priced penalty box to getting the best rate you deserve? Well, it's all about playing it smart. Okay, here are your key takeaways. This is your game plan. First, when you disclose, be precise. Don't be vague. Vague gets you smoker rates. Second, you have to shop by carrier rules, not just by price. Find the company that's friendly to your specific habit. Third, and this is a big one, don't ever assume that first high quote is the final word. It usually just means you found a bad match, not that there isn't a better deal out there. And finally, be consistent. Make sure your story is the same from start to finish. You do these things and you'll find your way to a much, much better rate. So I want you to ask yourself this next time you see a life insurance quote. Is that high price really a reflection of your risk, or is it just a bad match? Is it just that you walked into the wrong game with the wrong set of rules? Because once you understand that difference, that's when you take back control of the whole process.